And so welcome everybody for being here. We would like to start the meeting by asking you, how are you feeling today on the scale of these paintings? You can leave in the chat the number of the painting that you feel today. Right now, I think I'm in a number 8. Okay, so I see John is also in a number 8. Perfect. So as I was saying, we're very excited to have you all here. Thank you, IDEO team, for being here. We're very excited for the webinar. Thank you, Anukriti, John, and Becca. If that's okay with you, we would like to start the session. We would like to remind you all to have an open mic, to be open to questions, have an open camera, and be and you can participate whenever you want. We're gonna have a Q&A at the end. So if you want to write your questions for the last part of the meeting, that's okay. So thank you very much. So I'm gonna let you share screen, Anukriti.
Thanks, Gonzalo. I will share screen and hand it over to Becca to start off the session. Gonzalo, I actually don't think I have permissions to share screen.
Ready. I already made you co-host.
So this should work. Give me a second. Can you all see my screen?
We can see it.
Can everybody see the full screen version?
We're good.
Awesome. All right, Becca.
All right. I'm going to kick us off. I'll introduce myself. I'll invite Anu and John from IDEO to introduce themselves as well. And then we will jump into some content. But hello, thank you so much for having us. My name is Becca Carroll. I am a senior director at IDEO. My discipline is business design. That's not really a job outside of IDEO, but it's kind of everything that sits in between good idea and something in market. That's sort of what business design covers. I've been at IDEO for about 9 years now, whole time focused on the future of the financial system in varying forms, and co-lead Last Mile Money along with John. And so maybe, John, I can invite you to introduce yourself.
Thanks, Becca. I'm John. I'm a designer at IDEO and co-lead Last Mile Money. I've been working in the field of financial inclusion for about a decade now. And yeah, around how to improve mobile money, digital financial services for low-income people, as well as agent networks in the ecosystem. Let me pass it to you, Anu.
Thanks, John. Hi, everyone. I'm Anukriti. I am a senior interaction design lead at IDEO Last Mile Money. A lot of my work in the past 4.5 years has been to design products and services that feel in tune and serve the low-income communities and feel right for them. Excited to be here and share some of our learnings through this time. And Becca, if you want to tell everybody a little bit more about Last Mile Money.
Yeah. All right, so let's dive in. And as Gonzalo said, just housekeeping note, if you have questions that come up as we're talking, please feel free to drop them in chat. One of us is going to be active in chat answering as we go. And then we're also going to have a good amount of time at the end as well for just questions and discussion. So whatever is coming to mind, don't hold it in. Let us know. We are always iterating this. We always want to make it better. And we always want to hear what people are interested in going deeper on. But if you go to the next slide, Anu. I won't spend a ton of time on this, but wanted to sort of give a quick introduction about what is IDEO, what is Last Mile Money, to set a little bit of context for this playbook that we've built. IDEO is a global human-centered design firm. We've been around for about 40 years. At our core, we believe that innovation that actually matters, innovation that actually changes the world, it sits at the intersection of 4 lenses. 1, what is desirable for people? Are we making something that people actually want? 2, what is feasible to create? I want a money tree in my backyard that grows bills and I can pay for everything. It's not feasible to make it, so it's not great innovation. 3, what's viable, which doesn't always mean how do we create a for-profit entity? How do we pull all of the profits out of everything we create? But really, how does what we're creating become a going concern that can sustain in the world beyond the moments that the designers are creating it? And 4, just as important, just as critical, is what is responsible not just for the end user that might interact with the product, but for the systems that it sits within, whether those are societal systems, ecological systems, climate systems. Spend a lot of our time thinking about the second and third order effects of what we design. Maybe kind of built on those 4 lenses, about 4.5 years ago, we started Last Mile Money, which is a collaborative network that is broadly focused on how do we connect underserved and unbanked people worldwide to the digital economy. We were funded primarily by the Bill and Melinda Gates Foundation, but we have a network of incredible other partners that we've gotten a chance to work with, from big multinational corporations to small startups. And really, we've anchored our work in building products and services that, leveraging financial services, effectively like make people's lives better. And I'll talk a little bit about the kind of the 3 areas where we focus and where we've been designing and building over the past few years. The first one was really about thinking about how do we actually digitize people's financial lives. Digital money is not very useful if you don't have any ways to spend it, any ways to use it, any places in your real life and your real economy that digital money can interact with. And so we spend a lot of our time thinking about, for end users, for micro merchants, for community members, what are the things that we can design alongside partners? Who should we be working with that are creating products and services that digitize the financial transactions we know people need to make every single day: saving, spending, credit, all of that. Second big area of focus is thinking about the on and off ramps to digital money. So we built a lot of prototypes looking at cash in, cash out networks, thinking about things like liquidity, thinking about things like onboarding, thinking about things like mobile money agent experiences. And the third area, which is really what we're here to talk about today, is actually like using a digital device can be incredibly scary. Putting your money, something you really need in order to pay your bills, eat food, onto a digital device can be even more scary. So what are we building that is actually creating digital and financial confidence among new internet users? And what can we create that's going to propel those users to be able to not just have the utility of financial services, but actually have the joy, the fun, the confidence of being able to build a livelihood? And so that's where we do a lot of our focus. If you go to the next slide, it's been a roller coaster. We've built well over 100 prototypes at this point. We've gotten to work with incredible organizations. Those organizations are now reaching millions of people with the prototypes, products, and services that we've designed. And this playbook that we're going to share was designed with 50+ organizations through the Last Mile Money Network. And so really, we are sharing work today that isn't really just IDEO's work sitting in a room with, like, smart designers who can make things pretty, but really the work of so many incredible partners who are building and launching financial service products worldwide. And really just the synthesis and patterns and sense making that we are doing of saying, wow, we know all these folks, they're incredible. What are the kinds of things that we're seeing work, and how do we spread those things across the entire industry? And so maybe with that, I'll hand it to John to talk a little bit about what do we mean by financial confidence and what is this playbook?
Thank you, Becca. So on the next slide, I think we want to begin talking about what inspired us to create the Financial Confidence Playbook and why. So according to the GSMA, in the past year, 200 million people came online for the first time in their lives. And what that translates to is every week, millions of people come online. Now, I just want to invite you to think about that for a moment, how exciting that can be, and also how intimidating that can be. You might think of a family member or a customer that you're seeking to serve. The world of digital opens up many possibilities, from WhatsApp and being able to connect with different people through chat, or YouTube and watching and learning and being entertained. Those are slowly becoming common household uses for things like digital and smartphones. The internet's also opened up the possibility of connecting to the digital economy and the chance to make more money and to access financial services. And while these doors are opening for many more people, including low-income people, these new internet users also need a lot more support and help to get started and to navigate safely. And so we say that of all the experiences that these new users are facing, digital financial services continue to feel the most daunting and high risk. So here are a few stories of those people that we've been inspired by, people that we've met and talked to over the years at IDEO Last Mile Money. So in India, we met Pravina, who's a banking agent who works with low-income and rural women. She says that her women customers don't understand formal banking, but they themselves are highly resourceful and manage their family's finances. But financial terms, banking terms have never been part of their vocabulary, and the world of formal finance feels quite alien to them. In the UAE, we talked to Bilal, a migrant worker who sends remittances back to his family in his home country. And he remembers his first time trying to send money back home as a remittance. There was fear, there was uncertainty, there was so much that was new in the interface. Will his money be safe? Will one wrong move or mistake means the money is lost forever? These people have operated in cash, and so the tangibility of cash really gets lost and trust is lost when they move to digital and the digital experience doesn't support them. The last story here is in Indonesia, where we spoke with an agent, Yasaka, who reminded us that digital is her digital experience is very different from our digital experience. And for her, the smartphone that exists in the house is not just hers. She shares it with her family, with her children, and with her husband. And so she also uses her feature phone and does the most basic functions using that. So these are some of the stories that inspired us and remind us who we're designing for ultimately. On the next slide, we know that money works differently for last mile users, for low income people. So a few things here to call out are that cash reigns supreme. For many people, cash is easy to touch, it's physically there, it's also free to transact. And so when these people go digital, they are seeking similar things to reassure them and give them that trust, and also the control to be able to convert from the physical safe cash that they're used to digital money. And then maybe one other thing here is that the shape of their money, the flows of their money are also different. They often transact and plan in shorter time cycles. And that means the products have to work differently to also account for um, income variability or seasonality, unexpected expenses, and financial shocks that can pop up in their lives and disrupt their finances. On the next slide, we also know that digital feels really different for them. So we know that many people, many of the lowest income people, use more affordable phones with less sophisticated hardware and smaller screens. And sometimes in the last mile, low battery life, limited storage, broken screens, and also basic limited prepaid data. So that means every time we offer a new digital service, it's asking for a trade-off of, is this new offering worth it for them to make space on their phone for it? On-screen keyboards are hard to use for them. Mistakes are very common, and finances that can lead to huge mistakes and limited literacy. So not everyone can read what is written on a screen, but may rely on visuals and muscle memory and even voice. So all this brings us to the question of, how do we keep these people at the center? Their context is different, but their dreams are very similar to ours. They want a better future for themselves and their families. And at Last Mile Money, we believe that they deserve more than just access. They deserve products designed for them. So building digital financial confidence lies at the heart of our approach. So in 2020, we worked with Google Next Billion Users to launch the Digital Confidence Toolkit that helped product teams design approaches to gain empathy and design better products for last mile users, for new internet users. And over the past few years, we've been applying digital confidence to now build over 100 prototypes and products. alongside our partners. You might have seen this on a slide that Becca showed when we talked about our work, but we've partnered with fintechs, e-commerce companies, financial providers. And so that led us to last year where we launched the Financial Confidence Playbook. So whereas the Digital Confidence Toolkit, which is still available publicly on a website, tells you what's missing and how to get started, the Financial Confidence Playbook shows you what is good design, what does it look like in practice in digital finance. And again, this is based on over 100 prototypes and products, many of which are now in market. And also, we launched this in August. In the past 6 months, the playbook has now been seen over 30,000 times in over 100 countries. So today we're going to share some of that with you. And with that, I'll pass it to Anu.
Thanks, Sean. So before we get into a little bit more on the details of the playbook, we would love to share some of our learnings, which we found cross-cutting, whether we're designing a product in Mexico or in India or in Africa. Some of these learnings and shifts tend to hold true irrespective of the geography. One learning and shift that often comes to mind is the shift from percentages to plain everyday language. When we talk about finances, and most folks who are into the financial world, they love their numbers, they love their Excel sheets, they love their calculations. But when we talk to these users, they're not thinking about money in percentages or in formal banking terminology. They're often thinking about money in concrete terms. Oftentimes we've seen in research, we'll ask them, hey, how much do you think you're earning on your savings account? And many will say, very few will say, I'm earning 10% per annum. They often say, I earn 50 rupees for every 1,000 rupees I put in, and I will have enough at the end of it to get a TV out of that. So they're thinking of money very differently, very specific to the needs it resolves for them. One thing that we need to do as folks designing for this audience is to try and use languages that feel intuitive. Try and help and make these calculations a lot more easier for these people rather than expecting them to come on to completely new terminologies and adopt new ways of thinking about their money. Some examples that we've seen work is specifically in this credit product that we designed was to let go of percentage completely and to explain terms in more intuitive whole number based language to say, if your loan amount is a certain amount, here's the total repayment amount you will give at the end of the term. Here is what it looks like to include some interest in it. One other small nuance of language here is even installment schedules. Oftentimes we tell our users that you will have to pay on the 28th of this month, and they often forget that day. Whereas even talking intuitively in terms of saying every Thursday is your repayment day, in terms of the weekly day that it has, brings in a much better mental model in order to get them to understand these terms. Another example here is even thinking about how visuals and language and your overall look and feel can add to their understanding and this feeling of this is for me. We saw in India while designing an app for rural women that they weren't that used to shopping carts as the iconography that they were used to. There, they were more used to bags or baskets. Switching that out for some of the e-commerce platforms saw a lot more recognition amongst this audience. As we think about this as product managers, designers, how can we let go of more Western-based mental models that have come up as the standardized default and think about what's true of their context and bring that into the design of these products? We've often heard of the saying that less is more, and it cannot be more true when it comes to designing for products which are for the last mile users. We think about the shift from all at once to one at a time. As product leaders, we've met so many CEOs, CPOs, and they all love to, gloat about all the things their product can do. My product offers savings and airtime, and you can take out credit also from it. And we often realize that often these users do not associate with your product in similar mental models. At IDEO, we call this the kitchen sink design, where we throw in everything together and Becca, thank you for bringing that up, where we throw in everything together and it's really hard to find exactly what you need. So thinking about this more in terms of how can you unlock value for them one step at a time? How can you break the complexity up and build to higher order transactions or features one step at a time so that you give them confidence to explore this unknown digital world that they've suddenly been thrown into. An example here is from a neobank in India. They are called Mool and they're pretty awesome. They thought of this idea of breaking their KYC, which is the know your customer flow, into smaller chunks to unlock features with respect to how much KYC the user had completed. So instead of saying, hi, come onto my platform and give me your phone number, your government ID, scan your receipts, do everything, that is so hard to do even in plain everyday terms. They said, okay, let's do this one step at a time in relation to what it unlocks for you. Thinking about these step-by-step processes, specifically when it comes to really complex flows, it comes to unveiling features of your app, can really point towards principles around, look before you leave, showing them the value before expecting your users to commit a lot to you. Another example in which this idea of shifting from all at once to one at a time that comes up is often in the context of credit. So we saw this with a liquidity provider in East Africa. How can we build up to larger investments and loan sizes by setting the original sizes to be smaller and encouraging users to understand credit worthiness, repayment on time in order to unlock higher values? And we actually saw that there was a drop from 15% to 3% in default rates based off on that. But just this idea of not everything needs to happen together. How can we slowly ladder up to the right thing, but build confidence and financial literacy as we go? And finally, one example, and the playbook has tons of these, but these were just some that we selected to talk about today. But another example is this idea of singular to collective. So oftentimes, and very unlike the urban environments that we all live in, we've seen that when it comes to the last mile context, often these folks are discussing and sitting and operating in tight circles. They're often not alone. There's either some family member who is a technical advisor. There are some folks who become financial advisors, and there might be agents as well who are playing the role of the assistants, but also folks who can help them give them more strategic advice as well. Oftentimes they're operating as a collective, and yet when we design products, we are designing products with the mental model of one user, one device. But what happens when passwords need to be shared with an agent, or when a husband and a wife need to review a financial decision together? We do need to think about blending this idea of high tech with high touch in order to really build for moments of empowerment, but also support as and when needed. Some examples here, we saw this for a group-based lending app in India. Just shifting and using gestural inputs like rotation and using the top space of a mobile device could help empower both the agent as well as the user, specifically in key moments where they had to review a financial decision together. They had to pass the phone and do a handoff between the two of them in order to fill in an OTP or verify a certain transaction. So thinking about these moments or collective moments where either there's a handoff or there are multiple people looking at the screen together, how do our products evolve in those cases to really represent a more collective sort of embodiment of it? And then finally, one last example to this idea of the collective is thinking about the role of the family in last mile contexts and even cultural nuances. We saw this in Pakistan, where the role of a family member, other factors around cultural and religious nuances really mattered when it came down to taking out credit. How does your product represent some of those nuances, brings in even videos and testimonials from people who are important, but also at the same time allows you to share a decision with your family to ensure that it's all right. These were some examples that one shifts that we've seen really work well as we think about, redesigning or iterating on our products, and some examples in terms of how to get there. I would love to pass it off to John right now, who will tell us a little bit more about the playbook.
Great. Thank you, Anu. So maybe some of you have been able to check out the playbook already, but here are a few tips for navigating to exactly what you need. We've included quite a lot of content in there, so we have in a few slides a few helpful tips. So we've designed the playbook with ideas for each stage of the product cycle. And this brings together insights, design principles, and examples of UI and UX around digital finance. But we do think that this has broad relevance and applicability to many different types of digital products, especially when designed for low income and last mile users. So whether you're designing a merchant storefront and helping informal merchants manage their inventory digitally, or you've launched a credit product and want to increase repayment rates, or you're scaling your product and want to design more self-serve onboarding to enable that continued growth. There's really something for everyone here. And our approach here is to allow you to navigate to this content in two ways. One is by use case. So what is ultimately valuable as a service to users, whether it's savings or credit or banking services, or to explore by product flow. And this is which step in the product is relevant for you, whether it's the discovery and onboarding to encouraging active use, etc. And we came up with this approach by testing it with product teams in terms of what would actually be usable and actionable for them. So let's say we go to the savings page under use cases. This structure is actually mirrored across both approaches, but under savings, you'll see a bit of a description. Then first, we want to remind you of what a user is thinking and feeling and asking in that moment in navigating savings experience. So you'll hear about some of those. And then below that, you'll see the moments that matter. These are key moments in the user journey to really design for. And so once you click into that, you'll see broad principles to keep in mind, and then what each principle looks like in action. I think this is where it gets really exciting for us, where we get to show you actual examples of digital products, features, screens that we've designed as prototypes and products, and that many of our partners have taken out there to serve customers. And then that's the web page, but we also included access to a Figma library. So we've really designed this for product teams, designers, and engineers. And so in the upper right corner of the website, you'll always see a button to access the Figma library, where you can explore end-to-end flows and see, okay, I'm really excited about this one feature on this screen. What comes before that? What comes after that? How does this make sense as an entire digital experience that the user will experience? So there's a lot of inspiration there for you and your teams. And then before you dive into the playbook, we really just want to highlight a few critical things to keep in mind. The first is that the playbook is intended as inspiration around digital, but don't forget that digital is not the only answer for a truly inclusive digital ecosystem. So remember to think beyond digital based on what low-income and last-mile people need and do in their everyday lives, and also consider the unintended consequences that digital technology may have and bring, especially for the most vulnerable people. Second, make sure that you consider multiple engagement modes, especially for those without access to smartphones and people with limited literacy and numeracy. You'll see some ideas for this, especially in our conversational interfaces page, which talk about things like USSD, IVR, and chatbots. And then lastly, remember the playbook is intended as inspiration. Don't copy and paste or use this as a shortcut and think that you're done. This is intended as a starting place. take it, build on it, and test it with your users. And this may be obvious to many of you, but we have seen many last mile products in the past few years. And in many cases, the experience is still quite broken for these people. So you might see things that are like, oh, this is a no-brainer, but really the small fixes can go a long way to increase people's digital financial confidence and usability. So we've intended this playbook as a way to offer a new baseline that you can build on, so you don't have to start from scratch every time. Great.
Thanks, Sean. And maybe with that, we would love to show a little bit of the playbook to you all. I know we've spoken a lot, but would love to walk through and see how all of this comes together. Let me know if you all can now see my screen. Great. For everyone, thank you to the Erasmus team for sharing this on chat as well. Hopefully our URL is easy to remember. It's financialconfidence.design. It holds the playbook on a microsite that you can explore at any point. Like John mentioned, there are multiple ways to explore this based on your specific challenge and use case, whether it is for a specific product you're building or a flow that you might be struggling with. Jump into it through the homepage or at the top nav. All our use cases are lined up under the use case tab, and all our product flows are lined up under the product flows tab. Today, I think we've heard that many of you who might be joining this call might come from products that are trying to build a little bit of digital credit into your workflows. Maybe as I walk through the playbook, we'll see credit as an example and some of the ideas that we have to share within that. Specifically, when it comes to digital credit and this audience, we know it's a big challenge and it's a significant one, specifically when we know that they don't come with a long history of data points to inform credit decisions or to mark them credit worthy or not. Oftentimes, what these folks resolve to is informal loans, which have exploitative interests, and that is what the comparison point is. But at the same time, they're a lot easier. That is a mental model they're used to. Shifting them to digital credit interfaces comes with a lot of responsibility, but also a lot of fear amongst the users on whether they can repay things back, whether they have the right kind of data to get a credit from you. Thinking about the users and what's important for them when they see a credit product are questions around whether this money will come into the wallet as they have been promised. How do they understand whether the amount of money they're signing up for, is that right? Is that right for today? Is it right for tomorrow as well? How do they even commit to a repayment schedule when they know that their income is variable? How do they understand repayment terms and not be surprised down the road and know that there is a big fine coming up just because they didn't understand the terms well? And how do they ensure, and we mentioned this earlier as well, that decisions of taking out a credit aligns with their own values, whether it's religious or family or business values? A few moments that are key to designing the credit flow start from the moment of discovering formal credit, specifically when it comes in contrast with informal credit. How do we help users understand what's involved in getting a loan of a product? The next is the moment of the loan application. How do we help them understand their terms? How do we make it easy for them to take out the loan that they want? Repayments, often we've seen in a lot of products that everybody does really well till the point of formal, discovery and getting them the loan. And often most products fail at the point of repayments or try and or feel really challenged at the point of repayments and building for more seamless payments as they go forward. Repeat loan oftentimes is the case. Credit is a process that most users are in the cycle of. How do we give them tools that empower them to understand the next credit that they're taking out with you? And then finally, which is true in a lot of cases, specifically in the rural or underserved communities, are group-based lending platforms. What do they look like? How do they serve all the users involved in it? Maybe I'll click on a couple of these to walk through these pages really quickly. when it comes to discovering formal credit, I spoke a little bit about helping these users understand the basics. What is credit? How is it different when it comes on a digital product? When to take it out, and more importantly, when to avoid it, so they don't fall into loops of vicious credit cycles. And simultaneously, important for us to remember that we shouldn't be asking for a credit score. We should help them build one alongside them. When it comes to some of these pages, you'll see that a lot of these principles are broken down into multiple examples that we have designed for products out there, prototypes out there, and a lot of inspiration to take in over here. Maybe one example, is this idea of not asking for a credit score and building one with them. We spoke a little bit about the loan ladders that have come to be really common in a lot of products, but even thinking about what can you build from in your existing transaction data or payment data that can help them determine their credit worthiness. Another moment to look at is the loan application and how do we help our users understand the terms of their loan and onboard and apply with ease. Some principles here is to ensure that credit is a deliberate choice and not a foregone conclusion. How do we simplify loan applications by thinking beyond typing, because typing is hard for these people? How do we still allow for consideration before commitment, because signing up for a big long-term credit, which comes with its own repayment schedule as well as fines, is not that easy for these folks? And how do we build trust with radically transparent credit decisions? One such way that we've seen this idea of making credit a deliberate choice play out is playing with stuff like calculators as an experience, helping them select into these variables of loan amount, duration, repayment schedules. To us, they may seem like small decisions. For them, these are big decisions in the way they change the eventual terms. How do we build for experiences that help them play across these variables and see how they change the final amount they take out? Or examples in which we can offer them to share these decisions with their family and their trusted network to ensure all is well. Here are some examples. I won't go into all of them, but if anybody is interested, you'll see that all these principles come with a lot of inspiration. Tap into any of these pages and you'll be able to explore a certain part of the journey out. John also mentioned, but we do have a Figma library as well. You'll see that the credit page is full of different end-to-end flows like these, which you can take inspiration from if you're a product designer or a manager just looking to see what are the different steps involved in building these credit products. With that, I will shift us to a little bit of a Q&A now. I know we shared a lot, but we would love to get into the details of this, help you all, help answer any clarifications or questions that are coming up for folks. And I can't see chat, so maybe I will stop the share so we can all see chat.
As people are thinking about their questions, maybe I can kick us off with one, which is just if you guys like, because I think like we're in this position, right, where we see all these really cool, often startups, sometimes big businesses trying to design for something that often feels like a really big challenge for them, right? Like I need to design for a user that looks really different than the traditional user that financial services has served for, frankly, millennia. And I'm curious if there was like one mistake that you were like, please avoid this mistake, don't do this. What would you call out? Oh no, John, that was a question for you, just to be clear. I was getting the question started.
Great. Thanks, Becca. It's such a good question. I think even when Anu, you were sharing the credit page, something that resonated with me was that, yeah, for us who live and breathe digital products and digital finance, of course, it makes sense to offer like a really lucrative product like credit. We believe credit can actually benefit a lot of low-income people if they leverage it correctly and grow their businesses and increase their wealth. But that said, whenever we've done research with low-income people, they are often so cautious about taking a loan. They've had bad experiences in the past. They've been burned before, especially by their local banks. And so that early moment of consideration is so critical. So uh, yeah, how do we introduce it in the right ways? How do we position it so that it actually does benefit them? How do we clearly lay out what the benefits and the risks are for especially newer types of digital credit? Those are all things that must come early in the process. And then I think something else that was coming up was this point around what feel like really small moments for us who are product owners and product designers can often be really large and really negative experiences for people. So there's something about how do we have empathy for our customers, but sometimes that means uh, designing then not just the positive flows and how the product should ideally work, but also imagining, oh, when they input something incorrectly or don't know the answer to this KYC question right away, that can lead to a really negative experience for the customer, feeling like they're not smart enough, they're not qualified enough, and then they drop off. And oftentimes the product owner and the product team don't know why. And so I think those disconnects are some things that have really come up for us a lot in our work.
John, yours is so much more meaningful than mine. I just really want us to stop making the first product flow show a zero balance, which is like so common. Like, especially like, let's say you have a neobank, some kind of savings product, people are making deposits, and at the beginning, they don't have any. And it's like, it's such a confidence destroyer when the first time I get through a login flow and I've entered all my information, I've gone through a KYC, I really want to use your product, right? Like, and then the first thing I see is just a bunch of very large zeros at the top of the screen. We've seen people like immediately kind of turn around and be like, okay, it's not for me. And it just seems like such an easy design thing to fix. Mine is very micro, but I'm like, oh, why can't we just fix that?
I think another micro one I often come back to is this idea of like, let's stop explaining everything to these people in every single written text word that there is there on a screen. Like we've seen this come up so many times. Screens are layered with just text. And oftentimes we've seen that these folks, one, don't understand and are overwhelmed with the amount of text that goes on top of a screen. So really leaning into the power of visuals a little bit and thinking about progressive disclosure where we don't need to educate them on every small piece right from the start. There are different ways to do it. Audio does a great job. You can think about what happens at the end of a flow versus thinking about everything that happens right at the start.
Awesome. So I know that there are some folks who we've been able to collaborate with. Oh, actually, there's a question by Anna.
Oh, no, if you want, I can go after you. No? Okay. No, thank you for sharing this playbook. I as a product manager myself find it super, super useful. I was just wondering, sometimes when you're building the business case internally for making any of these changes or creating these features in the company, it helps to have kind of the case studies for research that kind of makes the case behind why it's good business. And I was just wondering, since you've done all these collaborations with real companies, if you have any available resources in terms of how their metrics changed. For instance, in the savings incentives, how much the savings deposits increased, or the adoptions of savings and users, or these type of things. I don't know if there's anything that's public from the work you did with these organizations that may be useful for us to build these cases inside the business.
Anna, it's like we planted you there because what we're working on right now, literally day to day, is an impact report to tell some of those stories directly, because you're totally right. Like, it's a very real question that comes up all the time, particularly when private sector orgs, startup orgs, VCs, investors, they're like, well, you're going to go after this customer base that I don't have a long track record of saying like is going to return. So how are you going to make money? Where's the money going to come from? And I think actually we have seen that to be true. This is both market expanding and profitable in a lot of contexts. And so, for example, we ran a pilot in Indonesia building on an existing sort of cocoa value chain to distribute digital payments, and found that mobile money agents that were operating in really rural areas were reaching the same or higher benchmarks as agents living in tier 3 cities. And it was like, wow, like, we have this sort of fiction we've created in our own heads that there's no way to do this profitably or effectively, but actually, we know this from any number of financial diary studies. Low-income people are using 7 or more financial products day to day. We've seen people grow market share. We've seen them, to your point, grow savings deposits. We've seen error flows reduce tremendously. I'm thinking, Anu, of Now Money and the redesign we did of how they collected payment recipient information. And all of a sudden their call center had to spend way less time basically fixing problems related to, I entered the information wrong and now I need to go figure out what happened to my payment. So there's lots of stories I think we have about that, because it really does work. And I think watch this space in the next couple months, and we'll share another public resource that'll hopefully give you some of that ammunition.
That's great. Yes, thank you. Yes, because especially, when you're pitching for these ideas and have limited resources, I think ultimately those metrics are the things that help you kind of push the initiative through. Thanks.
To add to that, Anna, I think we also walk into a lot of our projects with a sprint mentality to start with, where we try and, sorry for that, we try and understand our context, see what's working, what's not, do a lot of research within like a 1 to 2 week span to really assess for, hey, are we really seeing the kind of impact, or can we go in with a much more validated opinion on what to change? So perhaps even like thinking a little bit about that. Another trend that we've seen is like product folks have started sharing a lot more of, what works, what doesn't work with a much broader audience. So maybe finding ways to connect to similar organizations or people within there might also help understand a bit of what do you put your bets on.
I'm seeing this question in the chat from Clara asking, what are fascinating discoveries from research? So many. I'm going to list off a few that I think about, but John, Anu, chime in. One that I remain so fascinated by is that we've developed literally over millennia the ability to use physical money, the physical holding of it in our hands, the weight of it, the glance at it, to sort of immediately gut check for ourselves, how much do I have? And it's something that we have not been able to replicate on screen. And it's like one of the reasons digital money doesn't feel as real is there's something very meaningful about the tangibility of money, particularly for low-income people. And so I remain really, I don't have an answer to this at all, but I remain really fascinated by the interesting design explorations about what are the ways that we can, knowing that we have a screen, a digital device, and knowing that like we are therefore limited in the level of tangibility that we can create out of our designs. What are the ways that we can convey amounts, relativity, sort of metaphorical heaviness versus lightness of a wallet? I don't think we've like even scratched the surface there in terms of design exploration, but like with actual physical money, we sort of like perfected the design over generations. So like I find that incredibly fascinating. I think it's incredibly interesting to me how savvy so many low-income users are about fraud and how careful they are about their data. I think the general premise often is like, oh, like people aren't really going to be thinking about that. That's not going to be like top of their mind. It's actually like one of the first questions whenever any sort of new financial product hits their sphere and ecosystem is this something where you're going to defraud me? And like there's this immediate sort of base level of suspicion about like, uh-oh, someone's going to make money. And if I don't understand how you're making money, I am probably going to be sort of like taken advantage of. And I think that's like also a really fascinating thing to design for, because financial services, ultimately you're in the trust business. That's what you're doing. You have a trust funnel that you have to solve with all of your potential users. And so if they start from a moment of distrust, what design interventions do you have that build trust? John, Anu, what are some other ones that you're thinking of?
Yeah, I have a build on what exactly you said. I remember interviewing a mother who had moved to Nairobi from a rural area. And at that time, even there were so many digital and mobile credit products available to her. And she was complaining to me about how, why should I give away my data and sign up in all these forms when I don't know what they're doing with my data? I don't trust them. I need the money, but I actually don't even know if I'm going to get the money. So what's the point? So this goes back to an example I think that Anu showed around progressive onboarding and how do you redesign KYC to ask to make clear what the value is that you're offering, to only ask as much as you need to get the user further into the journey and also return value to them. I think, yeah, awareness around data privacy and also the risks of fraud and scams are really high on users' minds. Yeah, people are really savvy around that stuff.
Oh, John, you made me think of another one, which was with a product aimed at women in Pakistan. One of the first experiences in onboarding literally was just this question, like standard, like here, application questions, what's your occupation? And it was like this thing that like just ended up in the product, not because anyone was like, oh, this is like the most critical thing to understand right now, but just like, oh, like that's just one of the standard KYC questions that we ask is what is your occupation? And the product was targeting women. A lot of women in Pakistan are not working in formal employment, particularly the women this product was targeting. A lot of them are stay-at-home mothers. A lot of them are caring for family. A lot of them don't have sort of formal occupation. And it was this immediate like, oh, this product's not for me. Because the first question you asked me is, what's my job and what's my income? And I don't have that, so I shouldn't use this product. And that was this like really fascinating moment where it was like these things that we kind of throw in without thinking. The questions at the beginning of a survey, what's your name, what's your age, what's your occupation, how much money do you make? All of a sudden, like asking those questions in the order by which you ask them can turn people away from your product in really fundamental ways. I found that like really fascinating, really depressing in some ways, but also like an amazing design opportunity, right? They were able to redesign that flow and see completion rates rise. I don't know the exact numbers, but I know you probably know by a lot. And it was literally by moving that question to later in the flow. So the first thing you saw wasn't, oh, hey, you don't belong in this product. I know we
I
are
have some more, but I know Anna has a question, so Anna, go for it.
Yes, sorry, and if not, I can reach out later on. But I actually have two questions. One was regarding if you faced or if you saw any barriers in terms of contact channels for these clients, because at least in our experience, we face a lot of challenges with people either not having emails, for instance, or not using them recurrently, or with their cell phone numbers, changing them quite often. So that's then becomes a challenge for instance, credit, like preventive collections and stuff like that. But I don't know if you saw this and like best practices to tackle these types of challenges through design. And the second question is more regarding how can organizations engage with you to, because I know you collaborated with a handful of them, but like if other organizations are interested, like what's the best way to engage with the last mile money initiative?
Thanks, Anna. I think to your first question, maybe thinking about, I feel like emails are a no-go for sure. I don't think these folks understand that context. Oftentimes we've seen mobile phone numbers are the ones that many people use, but with the understanding that one, they might be changed to, they're often like one mobile phones per family. So how do you understand that this is a shared number as well? Alternatively, when it comes to credit products, thinking about what are different ways that you can assess this person's credit worthiness verification, which is not so hinged upon phone numbers, for example. Is it through somebody else's phone number? Is it through understanding where they live? So thinking about other data points that can sort of come into that. I don't know, John and Becca, if you have any other bills on that.
Yeah, no, I was gonna say the same thing. We have seen some of that behavior of sort of switching phone numbers. A lot of times it's like a self-inflicted wound of the industry of like there's a lot of incentives when you have new accounts. And so people are like, how do I get a new phone number and then have a new account? And then I get my $5 or whatever the incentive is. And so like in some ways I'm like, all right, we've done that to ourselves a little bit. We've set up an incentive system that like makes this both viable and like arguably like very rational to do and go after. But we have seen some of that behavior. And I think Anu's other point is really real. We have seen quite commonly that people are like, I share a phone with my husband, with my son, with my brother, whatever. Now I need to use your product, but you assume that just because I'm using this phone that we are one person, and we're not. And so I think there are sometimes interesting ways that I've seen people go about it. Obviously, like some people anchor in WhatsApp as like their sort of primary auth method. Other people are using different kinds of social connect methods. Sometimes people do one-time passwords and kind of require you to maintain access to a specific phone number, which usually doesn't break too badly if the product that you have is like desirable enough. People typically find a way to get back into it. But yeah, it is a challenge. I don't know that there's like a single sort of silver bullet answer. I think the second question in terms of how to get involved is like, we're not a huge organization, we're not a huge team, just reach out. We are on the internet in lots of different forms, on Substack, on LinkedIn, on Medium, and then the three of us, I mean, we can drop our emails and we'll share this presentation afterwards, but please feel free to reach out to us because we would love to find ways to collaborate. And with that, I know we're 4 minutes over, so thank you so much to all of you that give us an extra few minutes of your day.
Thank you very much. We were very happy to have the webinar, to get to know you, to get the knowledge, to see the financial playbook from your view. So it was great. Thank you very, very much.